Hey, this is Seth Peek with Peek Realty and Peek Painting in Atascadero, Central Coast, California, here once again with my buddy Harry Bennet at Equity Reach Mortgage.
Yeah, thanks again for having me, Seth. Really appreciate it, man.
Yeah, today it's going to be pretty to the point topic. We're going to be talking about rate buy downs, how it works for the buyer, how it would work for the seller, and how it can be advantageous to both, right?
Yeah, absolutely. And we've actually had the privilege of serving a couple mutual clients that we were able to implement these exact techniques that help lower their monthly payments and ultimately get them the best payment that they can for today's day.
And often, we talk about either reducing the price, saying I'm going to pay you less for the home.
Yeah.
But having seller credits is actually more of a win-win for both sides when it comes to monthly payments. It can, as we'll see in the next couple slides, it could really work in both favors doing seller credits to buy down the rate versus just chopping money off the top of the offer.
Yeah, absolutely. And just to kind of simplify it, because a lot of folks, when I've had the conversation and say when we talk about permanent rate buy downs, temporary rate buy downs, they hear points, they hear all these things. So just simply put, when you do a permanent rate buy down, you are buying down the rate permanently fixed for the entire life of that loan. If you have a fixed 30-year mortgage, you're buying it down fixed for the whole life of the loan. So it will never change. Temporary, there's the two differences. You got the permanent, you got the temporary. Today we'll be focusing on the fixed option, but there is another option out there which is temporary, which means it's only going to last for so long.
And quickly, what's more often utilized, and which one is more, does it weigh heavier in favor of one or the other?
Well, they both have their advantages and I guess disadvantages, but I personally see a lot more folks liking the permanently fixed option where they're going to permanently buy down that rate. It's just because I believe it helps a lot of folks know that they will never change. Their principal interest payment will never change for 30 years. Now, the temporary option is more savvy. You could definitely see a lot more significant savings in the first year to 2 years, especially on a 2-1 buy down. But then again, you're going to sleep every night knowing that, if rates do tick back up, you're going to go back up to your qualifying rate.
Right. Yeah. Gotcha. Yeah. And the advent, for me as the realtor, it helps me in negotiating too, because oftentimes you could be at asking price, but with a seller credit of nearly the same amount as someone who's offering less. Say you're like offering like $10,000 less than the asking price, and we're offering asking price with a $10,000 seller credit.
Right.
What's the difference to the seller, really?
I mean, yeah. I mean, if in both scenarios you're asking $10,000, I mean, at the end of the day, the seller's netting $10,000 less in both scenarios, right?
But the buyer's getting potentially a better rate
if they apply it. Yeah, 100%. That's what we use. We use Mortgage Coach platform to help illustrate what type of savings that they would actually obtain if they were to do an interest rate buy down. They can certainly do that, or they can lower their closing costs. So they got two options.
Right on. Well, do you want to show us some examples?
Yeah, let me show you a screen here. So let's see. Okay, let me know when you can see it.
Good to go.
Okay, perfect. So on this scenario here, we have a purchase price of $700,000, right? And you have two columns, one with a no buy down, one's with a buy down,
right?
And so the purchase price is going to remain the same there. The loan amount's going to remain the same, but you will notice the interest rate. So this is, for today, with a borrower that has like a 780 credit score, they're putting down 20%, it's conventional loan. You're looking at a 7.375, with zero cost to the borrower, no points. Now, if you look to the right, you could actually drop that. You can go to 6.5, right? Now that's going to create a significant amount of savings. Now there is a cost to that, and we'll go over that in a second. So when you look at your payment down here, your total payment, you went from 46 to 42.81, which is creating a monthly savings of about $330, right? Every single month. Now you're probably thinking, okay, well, how do you get to there? What's the cost involved? So every situation's going to be unique, and I have to actually quote it. But for this example, this is a $9,100 cost, right?
Right.
Now that cost can be paid either by the borrower, it can be paid by the seller for a seller credit. So you don't actually have to inflict that cost to get that payment. If that's what you're aiming for and you want to get that savings, that's a great way to do so. Now, the next page I want to go over is to help illustrate what that buy down looks like. So we have 4 columns here. The top column, we have no buy down, which is going to be your very vanilla transaction. Okay, no, this is not asking no price reduction and asking no rate buy down. Okay,
Right.
the next column is a price reduction. Next one after that is a rate reduction, and the one after that is a price versus rate. So on the first column, it's very vanilla. I'm not going to really go over it because it's pretty standard. The next one's a price reduction. Say, hey, Seth, I love this house. I want to get the lowest payment possible. So could you please negotiate with the seller? And I want to knock off $10,000 off my asking, from my offer price. And you go, okay, great. Okay, so you start writing it up, and you think it's going to really save you some big bucks. But I have a story to tell you that $10,000 is really only going to save you about 65 bucks a month.
Right.
That's probably not really what that couple or that person's really looking for, but they think in their head $10,000, right?
Yeah.
So that's a $65 savings. The next column is the rate reduction. You have the same scenario. Say, hey, look, we're going to give them asking that they're $700,000. However, we would like to request a $10,000 seller credit. And actually, in this scenario, I requested a $9,100 seller credit. So let's say these 2 offers are competing against each other. You got 2 offers here for the seller. Seller is likely going to pick this option for the $9,100 seller credit versus the $10,000 hit, because they're gonna gain an extra $900 at the end of the day.
Yeah.
Right.
Yeah.
So in that scenario, we could use that $9,100 and apply it to buy down the interest rate. Right now, you're at 6.5 versus 7.375, and now you have that monthly savings of $328. Okay. The last column here, price versus rate. This is really comparing the two, and this gives a big perspective to sellers, realtors, buyers, and how to really make where's that break even point. So in order to receive that same amount of monthly savings for 328 bucks, the seller or the buyer has to knock off about $60,000 off that asking price in order to receive the same amount of monthly savings. So as you can see, that's probably unrealistic, especially in our market.
Right.
Even a $10,000 ask is going to be sometimes tough, but if you apply it correctly, you can actually create very big savings.
So if you, as a buyer, if you can make it happen, then kudos to you. But in this market, especially, asking for a $9,000 seller credit is going to be a lot easier than offering 60,000 less than asking, right?
Yeah, absolutely. I'm going to stop sharing my screen here. And I think that comes really to a guidance of a fantastic, good realtor, right? Someone with experience, someone that knows the area, someone that can help guide the borrower and work with the lender, that you're all on the same team, right? And that, I think, is what helps guide these people. What they really are looking for is they're looking for monthly savings 9 times out of 10, right? Unless you're talking to like an investor that's buying cash, this would not apply to them anyways, right? But if you're looking for most families are looking to create that significant amount of savings, this is the way to go. And that would be a guidance starting from a realtor and saying, hey, look, if I can save $10,000 off the purchase price, or I could get a $10,000 seller credit, I would prefer you to go with the seller credit. Two reasons why. A, it could drop your cash to close. So what's actually going to hurt your pocket today, this will help because $10,000 is a lot of money. Secondly, we could also use that to create these monthly savings.
I mean, monthly savings like that. I know it's an example, but that's like it's like a small car payment or like club soccer dues for your daughter or son, you know.
That's 2 nights out at dinner with the family.
I know nowadays. I don't have children. I don't have
it's
children,
crazy.
So it's like $100 for a nice dinner.
Oh,
for
that's
2 people.
right. Yeah. Well, I've got a gang of kids, so you know, I'm like, everyone's ordering water. You know,
I was trying to equate it to something, and I'm like, I think it's like a small car payment, right? You know, so,
yeah, that's like a small car payment. I mean, you know, not to mention what you could do with that $300. Like, let's just say you're comfortable with that payment before, right?
Mm-hmm, right.
And now you can actually take that $300 and maybe now you can actually invest that $300. Mm-hmm. You could actually give it back to a financial advisor and say, hey, look, I want to start growing something every single month. I have $300 I just created in savings. I want to actually apply it to some type of investment fund for my kids, maybe for a vacation I want to save up for. Those are great things to think about, you know, is what can you do with that extra $300 a month?
Well, always great talking to you. You know, we always great topics. You know, if you're looking to buy, you're looking for some loan advice, always talk to Harry. You can see down in the description, Harry's phone number, email, and social media handle will be down there. Give him a call. He will set you straight. Well, thanks again, Harry. I appreciate you. As always, I'm looking forward to our next chat.
Definitely. See you guys.
See ya.